Hello, once again, I'm Barry Schultz. Thank you for joining me. It is week number 9 of 2024 next week. Today is February the 22nd, late day. We saw the markets bottom yesterday, late day on February 21st, so that the prediction of the next market swing point or pivot point would be roughly February 23rd, plus or minus one business day for a 100% window, so it missed by just an hour or so. So roughly about an 98%, 97.5% accuracy for calling that bottom. The call was made, I think, a couple months in advance in early January. So the model did an exceptional job from a macro perspective, trying to predict market movement 6-7 weeks in advance. Quite phenomenal. It's taken me 10, 11, 12, 13 years to get here. To the point where the model is able to predict movement and turning points 7 weeks in advance. So I think that's quite astounding in itself. So up next we have the March 6th/7th peak. So that's a couple weeks away. And then the crash bottom or the market reset into late March for the cyclical reset. That should occur roughly around the Fed meeting date in late March. We have about 340 weeks until the Great Depression kicks off, so we should see markets march higher and higher on a very high macro scale into the Labor Day of 2030, and then see markets collapse and start the Great Depression from 2031 through 2035. So let's jump to the models and walk through what we have for this week. I think this week will be a short week, obviously, because as we get closer and closer to late March of 2024, the overall prediction window gets shorter and shorter. And so therefore, this prediction will come to a close. So if you followed me since early January, you've seen the model predict that the markets would peak right around Super Bowl and then bottom around February 22nd, 23rd-ish, and then pop higher into the March 5th, 6th, 7th window and top out there, and then bottom around March 21st. Again, this was all predicted in the first week of January 2024, so if you want to go back and review that video, you certainly can. And obviously, I think for those of you who wondered about that first video, why did I say that the majority of my models work really good with the S&P 500 but not with individual stocks? Well, after, let's see, about 7 weeks of watching my work, I think you'll agree with me that the model is exceptionally fine-tuned into being able to forecast the S&P 500. It's made some staggering calls with hyper precision weeks in advance, and even my short-term models have a hard time focusing on the precise date, but the macro models are able to really get a very good grip on where the turning points are in the markets weeks in advance, right? So that's where I believe the B.R. Schultz stock market timing model really sets itself apart. I think it has its own niche in the market timing window. Again, most other indicators and forecasters usually only talk about current day indicators, right? And then a week later, all their forecast changes, and they can't really keep a forecast consistent, as the saying used to go, as good as they can't carry a tune in a bucket, meaning that it's horrible what their usually what their forecast is week over week. It changes so much, it shifts like the shadows. So hopefully when you've watched my work, you've been astounded by the consistency of the model, shifting maybe a couple hours, meaning from day to day, over a long length of time, but not weeks and nothing like that. I've been able to keep a macro perspective very much aligned with how markets have behaved over the last 7 weeks in 2024. So if you haven't subscribed yet, please consider subscribing as well as sharing my work. It means the world to me when you would share, if and when you would consider sharing my work with friends, families, foes, stock market intellects, A lot of people believe that you cannot time the market. It's impossible. You can't predict the market. There's too many variables that are shifting day to day. There's too many economic variables, and too much stimulus from the Fed and the Treasury and all the things that they're doing behind closed doors to manipulate markets and prop markets up, or try to limit how markets move to the downside, things of that nature. You might think it's impossible to predict the stock market. So hopefully I've broken and shattered that paradigm in your minds and in the minds of the masses, hopefully over time. And hopefully you cannot find anything like my work on YouTube or TikTok or any other social platform. And with that, if you want to tip me, my favorite number is 34. You can always donate $34 in out of kindness or generosity to me, or if you feel like tipping more or donating more to my work, please do. My long-term range goal is to make a New York analyst salary on YouTube through donations. I'd love to do this full time. Unfortunately, I'm not there yet in my life, but I would love to do this full time one day as my yearly job. So if you want to help me get there, please feel free to donate. It would mean the world to me. And yeah, so also a little bit about the prehistory of my work. In 2022, I did an exceptional job. I created what I call a purple wave. It hit about 55 out of 57 calls in a row. So that's beyond legendary, right? Yeah, it was phenomenal. It was probably the most interesting time in my life that I've ever had for stock market timing. And then I tried to shift over to macro calls, and I made some big mistakes. And so that's what set me on the journey to try to master the macro or midterm predictions. And so hence I started back up in 2024, believing that I've got close to mastery of my mid-range models. So with that introduction, let's move on to the models. Thank you so much for joining me today. As is my custom, I try to start off my presentations, my weekly episodes, with the focus on the very high level macro, what I call the hyper peak, that is set for roughly Labor Day of 2030. I believe that's where you will see asset prices inflate themselves up higher, and higher into, much like Labor Day of the year 1929, and I'll show you that in a couple of slides. But essentially, I believe that you'll see that the markets will hit some type of hypersonic peak out near the end of 2030, and then that peak will be like the grand finale of the economic cycle, and then we'll see a depression from 2031 through into late 2035, and then I believe there'll be a double bottom in like 2037, and that sets up another 30 to 50 year window, a cycle in markets. So I believe we've seen another 30-year cycle since our 28-year cycle, 30-year cycle since the 2000 crash. So that's a little bit of an intro if you're new or you want to understand where the Great Depression comes from that I'm forecasting. I have a few slides here to present to you to try to support my thesis. And hopefully, as you see, my accuracy is head and shoulders above the rest for forecasting. You can understand where I'm coming from in regards to predicting this catastrophic event in about 6.5 years' time. So the beauty about these slides is I only have to update them maybe once every 6-7 weeks because they're so long term in nature. But essentially you need 3 touch points to create or forecast a future event, and you can kind of see how it predicted mid-late 2000 the market collapsed, and then the flat spot in the black wave from 94 to 96 kind of creates a double bottom for the black trend line I drew, which called out for a macro peak in markets at the end of 2007. Then we saw markets collapse into March of 2009. And then you can very clearly see a 1, 2, 3 touch point going into Labor Day of 2030 on the top side and the bottom side of the black wave. So I believe there's very strong support from this for a macro peak in markets in Labor Day of 2030. This is the 1929 monthly purple wave. This is the purple waves, what I was so well known for in the year 2022. That got me 55 out of 57 calls correct. Yeah, in a long streak. It was phenomenal. I don't know if anyone will ever be able to achieve such accuracy, at least in human modeling, right? Calling it with your eye versus having an algorithm that chose everything for you. So I called all those by hand and by eye. So quite a phenomenal record, if you will. But 340 is one of my favorite numbers in the stock market. 34, 340, essentially weeks away from Labor Day of 2030 for another, what I believe will be the beginning of a Great Depression in America and globally. But this is essentially how the model backtested for 1929, and the markets peaked in late 1929, as you know, and then collapsed into, I think it was like 1932. If you'd like to consider donating $340 or $34 or $3,400 for in commemoration of 340 weeks away from the Great Depression kickoff, feel free to use either one of these QR codes, or there's also a link down below for PayPal if you'd rather use that. And then again, this is the purple wave, showing the support for the thesis that we have a macro peak in late 2030, which again would kick off the Great Depression, much like the 1929 graph you just saw. And then I just zoomed out a little bit more in the model, and you can see that it's also predicting the same, also with the trend line going to the center axis. So I believe there's a lot of support here for a major peak in markets around Labor Day of 2030 on a very macro scale. Again, markets would collapse for about 3 to 5 years, starting in 2031 into late 2035. And then this is the same graph I used last week. You can see that it hovered right around where the market bottomed yesterday. And then markets popped very strongly. And I believe markets will go up until roughly March 6th or 7th and peak. And then we'll bottom around the Fed date in late March. So this graph, as you can see, was last updated around February 8th, because the dark blue graph in the back looks like the last date that it has data for was around February 8th, so right before the Super Bowl. So I haven't touched this in a week and a half, and so you can see it still was very much accurate in predicting a market bottom around the 21st, 22nd. And again, building my own custom models essentially gives me a little bit different spin on how I can run my models. So this is a 2x day model for my 3-minute bottoms. Essentially, what do I mean by 2x day? So basically you take every 2 days you take the open from the first day and take the close of the second day, take the high of both days and the low of both days, essentially. So you take the highest high for either or day, and then that's the high for the 2-day period, and then you take the lowest low for the 2-day period, and that's the low for the period. So essentially you're taking 2 candles and making them into 1 candle. And so I insert that into my model, and essentially gives me the bottoms, if you will. And again, it was picking out roughly here for the next turning point, and it's also picking out a point in late March. So again, very consistent. Hopefully you're seeing that. And again, this is my original zigzag daily model, calling out macro peaks in markets. Essentially, you saw it call the peak right around that February 9th, 12th time frame. And you can see that there's 3 touch points going again into roughly that March 6th, 7th peak date. So I believe that markets bottomed here roughly, as predicted, right around February 22nd, 23rd, 21st timeframe. Again, if you think I'm just making this up, you can go back and look at the videos from early January. I try to produce a video every week so that you can go back and look in time and see if I'm telling you the truth, if I'm recreating history. You can look at this graph actually and see that I haven't updated this graph since about mid-January, right? So I also like doing that from time to time because it lets viewers see that I have to update the graphs for my predictions to carry a lot of weight. So I find that very intriguing myself. So again, the model to me is suggesting that the next peak will be around March 6th, 7th timeframe. I kept this model in the slide deck this week. This week for next week's week 9, the week 9 presentation. Essentially, because it has a really nice 1, 2, 3 count going out to roughly that March 6th, 7th predicted time frame. This is weekly data, and it's using my 60-minute algo, but it really has a really beautiful 1, 2, 3 touch point. So I think you won't see markets really top out until then. And if you go back to my earlier videos from January, I believe that I was even predicting that markets could go retest highs or be right around the highs, all-time highs in the first week of March. So the Super Bowl did not hold the all-time high, obviously, but that's why I try to throw in that caveat in a number of my videos, saying that the macro high could also be around the March 6th, 7th, 5th time frame. So I hopefully that will be highly accurate. I thought this was great for keeping this week again. I think this 20-minute model is pretty interesting. How it's called a number of peaks, highly accurate, and as you can see, it's calling for that roughly March 6th, 7th time frame. So I try to keep these short because I've already shown these and jump to the ones that I haven't shown yet. Donation update. Basically, donations are just above $100 still. So hopefully, as more and more people see how highly accurate my models are, hopefully that will spur on donations. So, and then I'll assess at the end of the year if I want to keep doing YouTube videos the way I'm doing it, or how to structure my videos and website, things of that nature. So I'm trying just to do YouTube videos this year and see if donations will support just doing YouTube videos, because I feel like running a blog sometimes is a lot of extra work, and I think sometimes blogging gives way to my emotion, and so I'm looking for the least emotional way and yet provide the greatest value to the viewer, and I think that's through the video. So again, there's the PayPal link down in the description if you care to use that, or a QR code. I know some people may not prefer QR codes, so that's why I provide the link down in PayPal. And again, if you hit the thumbs up button as well, that would help me. I also thought this was a great graph to keep. I think it really showcases the March 6th, 7th peak. And so the 100% window, it's a difficult one, right? Because it's leaning towards the March 6th, 7th kind of breaking point. And so, do I put a plus or minus 4 hours on that? Again, this model was predicting it 2 to 3 weeks in advance. So I think the 100% window will be March 5th, 6th, and 7th, maybe. Maybe that's the best way to do it. Usually I get a three-day window for 100%. So maybe it's better if I do something like that. Pick the last day that's kind of choosing and walk it back 3 days. So March 5th, 6th, and 7th maybe will be the official 100% window if you want to try to grade my work, which it's been grading very high right now, right? Each call has been about in the high 90s, if not 100%. The 100% call was, as you can see in this graph, it called a late day peak in February 15th, early 16th. And that's when markets dropped really horribly into the 16th. So hopefully you found that highly intriguing. And this is just another way of viewing those peaks. Again, I think I really like the yellow trend line in this. It's calling for a major peak in markets around March 6th or 7th. So this model hasn't been updated since middle of January, and you can see that the model is calling for that bottom in markets around the February 22nd, 23rd time frame, as well as the final bottom markets around March 21st. All right, so this is the so my son is going to tell you what date that is. What date is that, bud?
10/26/2023.
Good job. So the markets bottomed at the end of October of 2023, and your turn. So where what date is that? March
31st.
20th, 2024.
2024.
Yeah. So basically, on my graph here, bud, you're going 1, 2, 3 on this black trend line, okay? And so then I'm extending it to the far right, and where it hits the top line, that's where the whole market resets, okay? So do you see on this yellow wave where it has the black 1, 2, and 3?
Yeah.
How this yellow line projects to the top? So when you drop down the green line right here, see that?
Yeah.
The whole graph collapsed into that point. See how it went down, 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 down?
Yeah.
And at that black check mark, that's where it stopped.
Yeah.
And then after the black check mark, the purple graph shot really high. Yeah, so that's what I'm trying to teach people in my YouTube videos. Okay, so I'm on family vacation this week, so it's my privilege to have a little background noise in the video. Be a good memory when in the future when I look back and listen to my own videos, I guess. So this is one of the first graphs I had back in early January. You can see that the zigzag had just popped after the bottom in market just in the beginning of January. So then also it was projecting that there would be a bottom in markets at the end of March. And then this is essentially zoomed in on the previous graph, and then basically from where the dates start and the yellow trend lines begin. That's your negative 100, and then you add 25 units to the top of the graph, and that's essentially how this is working. So I just zoomed in on the previous graph, and it's predicting that there will be a market reset low at the end of March, just like the end of October. I'm trying to incorporate a little loudness from everyone got back from swimming today, so I'm trying to incorporate some of the nonsense in the background, so again I can look back and laugh at and remember some of my memories here. So serving a dual purpose today. So thanks for listening to all the background noise. Okay, so this is one of the original graphs I presented in late January, essentially 3 touch points on the gold wave, and you can see how the gold wave flattened out around April, March of 2023, and so that counts as 2 touch points, and then the gold wave crested around September of 2023 as well. So the yellow arrow there is touching all those points. So essentially, this is what the original timing model had in it, was 3 touch points on the gold wave, and this is how it projects major bottoms in markets or major drops. Usually when you get 3 touch points on the gold wave, you get like a 10% drop in markets from their peak. So whatever the peak is in markets here in late February, early March, a perfect scenario would be a drop of 10% from wherever they top out on SPX 500 USD. So if they topped out at 5,500 and they fall 1,000 points down to 4,500, essentially that'd be your 10% drop. And again, it could be 8%, it could be 7.5% drop, could be 11%. It's just a rough figure, right? Markets usually drop about 10%. So hopefully you've enjoyed my show today. Warning, this is all forecast use only. Come here. You want to read this for me? What does that say? Forecast. Use only. Right. And what's this say?
Warning.
Disclaimer.
I am not
A licensed investment professional. That's Latin. So say caveat emptor. Seek professional advice prior to investing. Investing bears risk
of
financial.
loss.
Very good. And so basically this is saying if you ever try to invest in stocks or anything else, you could lose money. Warning, warning, warning. And all my graphs are subject to change. And not all the results are not always the same. Yeah. Thank you for reading for me.
You're welcome.
And that's it for today. I'm B.R. Schultz. Until next time, take care.